Good evening. My name is Stefan, and I'm the Vice President, Administration and Secretary General of PMI Malta Chapter. Today, we have come together with Dunstan Magro from WDM International for the purpose of tackling some issues that are related to startups from a project management perspective. Dunstan is a seasoned professional within the Maltese community, specializing primarily in audit, tax, and corporate matters. But I leave it in the capable hands of Dunstan to introduce himself in a more ample way. Dunstan, over to you.
Thank you, Stefan. Thanks for the opportunity. So, as you said, yes, I am the managing partner of WDM International, and we are an audit, tax, and business advisory firm. My career, which spans now around 30 years, saw me going through different corridors in terms of professional activities, and now my core area of expertise is tax matters, corporate matters, and advisory.
Thank you very much for that, Dunstan. We have quite a few questions that we would like you to address for us. And obviously, with a focus from a project management perspective and startups that can take a variety of forms, the first question that comes to mind is from a project management perspective. What does it mean to treat a startup as a project within the Maltese business environment?
So, project management. Project management is clue to many things done, not only at a business level, but I would say in everyday life. And project management is a combination of various skills. Now, when it comes to business, especially startups, one has to tackle a startup in different ways, but these ways have to be focused on one aim: to help the business develop and to help the business grow steadily, to achieve the goals the founders of the business intend to aim for. Basically, from a project management point of view, the plan which one comes up with prior to starting of a business has to be detailed. The plan has to be delivered in a timely manner so that each phase of the development of the business would ideally be monitored on paper and then executed according to one's thoughts moving forward. Something to keep in mind is that when you are a startup, and like any business, whether startup or not, but predominantly startup phase, because you would not have the experience of the business, one would need to monitor very closely the development of the business, keeping into account issues like what's happening around you, possible regulatory changes, possible interference from competitors, how your clients perceive you and your business. So all these factors will rope in nicely with what you have planned a priori, and you will modify your plan moving forward. So as you can imagine, it is a very lively topic to discuss and, of course, to invest in.
So, having introduced the topic in such an ample way already, how does applying project management principles early help founders reduce uncertainty and stress?
Of course, when you apply project management principles at a very early stage, the very first thing that you are doing is you are providing clarity. You are providing a vision which can be subdivided into many manageable steps. And this is important because you cannot tackle everything at one go, but you will tackle a bit at a time every stage of the business, which is very important when one is trying to achieve the goals you set at the very early stages. Of course, this type of certainty is important because without being very certain as to the direction one is going to, then of course you are preparing yourself for a recipe which might not have a very happy ending.
So, does this require a mindset shift when moving from an idea to formally initiating a business as a structured project?
So technically, when you start off something, usually this would be the result of a dream. I dream to have my own business. I dream to achieve this or that. But there is something which is very fundamental between having a dream and making that dream become a reality. It becomes a reality. Why? Because you will be able to deliver what you thought initially could be delivered. So at the end of the day, it is very, very important to remain very concrete in the steps. And whilst you still have to be creative in what you do, you must not go overboard. You don't go overboard. Why? For the simple reason that if you do not control, if you do not move in the way you thought you should move, then again you are moving away from the certainty which we have spoken about before, and therefore you will not be able to achieve the goals you have prescribed to achieve.
What you have just explained reminds me very much of a key term that is constantly used, especially during a startup phase, the word business plan. When we talk about a business plan, should it be conceived as a cost or more viewed as an investment that the founders are making into their own business?
Now, I am the first one to say that one should keep costs at a minimum. But when there is an investment and this investment is delivering, then you must keep investing moving forward. Now, a business plan, unfortunately, many people perceive to be a cost. Technically speaking, a business plan should be considered to be an investment in one's business. And why is this so? Because a business plan outlines, depicts, highlights various aspects of your business, okay? And most importantly, it shows and it explains to the founder, okay, and to the business investor what to expect. So consider the business plan as being broadly an insurance policy against failure, because you would be anticipating issues, you would see possible cracks before they materialize, and you address them before you start off the business. And this is what I mean by investment. You are looking long term, not short term. So yes, a business plan definitely is an investment in one's business.
We agree that the business plan should focus on the entire journey that the founders, that the business people want to perform through their activities. But if one had to look at the first 30 days for the purpose of setting a solid foundation, what would be those items in your view that the Maltese founder should prioritize within a Maltese context?
You mentioned 30 days, and this is very, very crucial because the initial stages lay down the foundation moving forward. So potentially, what should be done? Yes, first of all, you need to map out the financial plan. You need to map out different stages which the business might be going through. But most importantly, you should bring on board or know exactly with whom you will be able to interact, especially those people who would be providing advice, professional advice to you to help you navigate the waters of business itself. So in the first 30 days, I think these little steps forward are very critical and crucial for the business to achieve and for the founders to make sure that the business is adequately steered in the right way, because if you start on the wrong foot, the probability is that you will continue moving on the wrong foot. If you start appropriately, diligently, then the possibility of you making a success of your business is an increased possibility.
You mentioned suppliers, advisors, but within the context of a business, there is other stakeholders. So how important is it that stakeholders at a more holistic level are identified during these early stages?
The more you are able to identify these stakeholders at the initial stages, the better. Okay? But then every business has its own story. So, for example, if you start small, you do not need to identify possibly who your ideal target audience is. But if you decide to start heavy and you want to make an impact, it is useless coming up with great ideas when you don't know your audience, your target clients. So your target clients are part of your stakeholders. Depending on the business, an important stakeholder would be the regulator, if your business is a regulated business, because moving in an environment and you don't know exactly what is expected out of you from a regulatory point of view, then you risk not complying with your obligations, and therefore you would be in a position where possibly you would be fined, and basically, given that you could also be a startup, the regulator itself might come at you like a ton of bricks. So yes, the more you are able to identify your stakeholders, I think it would be the better. But again, we have to distinguish between the level of the business, whether it is a startup, whether the business is a seasoned business and it wants to diversify. So there are multiple scenarios where the stakeholders might be different. But as a matter of principle, yes, you are right. The earlier you are able to identify a wide range of stakeholders, the better.
So when one considers the different stakeholders that are going to impact in one way or another one's business, there's also another important evaluation that has to be made as to whether Malta is the right environment for their business. What are your thoughts on this?
Okay, it is important to understand that being feasible in whatever one does is important. Why is it so? Because if the business does not make sense, if the business environment is not conducive to you being a success in what you do, then there would be a problem. Therefore, by being feasible in this case, I would recommend that a founder of a business looks at aspects such as market accessibility. The labor force that is required basically is actually found. What complexities do arise from a regulatory perspective? Whether there are tax incentives which could boost the business. So these are elements, and there are others, of course, which have to be taken into account to ensure that, at least on paper, the business is a feasible project to go into. Then, of course, one will delve into the business very actively, being proactive rather than reactive to the changes in circumstances which the business would be subject to moving forward.
So within this wider context, how should the founders decide on the most suitable structure that they should have for their own business as a startup?
Very interesting question. I will speak from experience here. It is not the very first time that the founder of a business comes over and asks me, I want to register a company. Good. My very first reaction would be, why do you want to use a company as a vehicle to carry out your business? When we speak about startups by their own very nature are very fragile. Meaning, why do you use a complex entity such a company when you don't even know how to walk? Okay, therefore you start small, and eventually, should the right criteria develop, you turn into a company. So my advice always is and always has been: start small, start off as a sole proprietor, start off as a small partnership, but do not go into the complexities of a company, because the company, compared to a partnership or compared to a sole trader or a sole proprietor, is much more complex, even from a regulatory point of view. So you grow into it. Then, having said this, one has also to take into account that you operate through a company if, for example, the circumstances, the business circumstances dictate so. For example, you might be doing business in an environment where, unless you are a corporate entity, nobody wants to do a business with you, especially if you are dealing with international trade. In that case, it might be that you have to incorporate a company and not act as a sole trader, or you are entering a public project where you have to show that, listen, you are regulated more as a company rather than a sole trader, and therefore you can participate in that tender, for example, because you are a company rather than as a sole trader. But circumstances vary. My word of caution would be: you do not own a company, you do not invest in a company for the sake of having a company. So the vehicle has to match your business model. If a company is the right business model for you, you go for the company. If acting first as a sole trader and then you evolve into a company, then so be it.
You mentioned that moving from operating via a company can be quite complex, and there's a level of agreement on that, because obviously a company has its own personal it's a legal person in its own right, it's got its own mechanics, so it might appear as quite complex to some people. So when it comes to defining roles, responsibilities, and agreements between co-founders, how critical is that from a governance perspective?
From my point of view, it is essential that these agreements are properly governed. Why is this so? Again, speaking from experience, two people meet, two people have an idea, two people want to develop the idea, and they want to move forward. Moving along the line, there could be a dispute. A dispute arising from, I did not tell you this, I did not tell you that. So in this case, having proper agreements with the company's shareholders agreements. If it is between business partners, then you have to have a partnership agreement. And it's not the partnership deed, which is the constitutive document. I am saying an agreement which one enters into before registering a partnership or registering a company. In this agreement, one would lay down the foundations of what is expected from the other side. So you are agreeing on what to expect. You are agreeing on what if certain circumstances develop. How would one act? What are the responsibilities and therefore the obligations? Okay? And these agreements are very crucial. Unfortunately, I came across situations where, in the absence of these agreements, a business fails because what was intended to be something nice, something which will bear fruit, because of these disagreements, the business crumbled. And besides business, at times you have individuals who enter business as friends, they go out as enemies. It's not worth it.
Unfortunately, I share in that experience myself, where yes, unfortunately, some businesses start on a very good positive note, but end on a very sour note as well. So I'm sure that we agree that governance structures should be considered as part of the project setup, even if we're talking about micro businesses, and technically should also be part of the business plan.
Yes, governance is always important to have, whether you are a startup, whether a micro business, or whether you are a fully fledged business, possibly even a multi-million business. And why is governance important? Because governance gives you rules, government gives you a framework within which one can operate. So if you start small within this framework, within this forma mentis, then of course, moving forward, you will carry that forma mentis with you and you would not want to deviate from that forma mentis. If you do not deviate from this forma mentis, it means that at a foundation level, you are geared to make a success of your business. So yes, governance at all times is extremely important.
We agree that the importance of governance should never be underestimated, especially because when business people enter into a business with a particular frame of mind and things go south, there is a tendency that the governance aspects are completely forgotten and it becomes more a matter of self-preservation. So the question here would be, how can the co-founders find a way that they can manage conflict and escalate in a way that would still be sound for the business rather than for themselves alone, thereby jeopardizing the business?
So when people are in business, like in everyday life, it is not always that they agree on everything. So one thing which has to be looked into, for example, is how should I resolve a dispute should this arise? What mechanisms must I adopt? Shall we try to resolve the issue in good faith? Should we resort immediately and we go to the courts? So having these pre-established mechanisms in place will give certainty as to how to act in these circumstances. And I would like to say that you avoid the scenario of a pressure cooker. When there's too much pressure, the cooker will literally erupt in front of your face. If that is the case, then from experience, and you will agree with me here, this is a recipe for disaster. So I honestly always subscribe to the point of view that having that mechanisms in place and you agree on these mechanisms, and this is where professional advice also comes into play, because the professional will always guide you as to how to address these issues. So addressing these issues is important going forward because it provides peace of mind when trouble comes knocking at your door.
I definitely agree. And adding to that, I would also say that what is also crucial apart from the governance structures is the respect that both business parties, or no matter how many there are, the respect that they would show towards these governance principles, because at the end of the day, rules are there to be respected. There's no point in agreeing on a set of rules if then we're going to simply throw them to the side. Throughout our discussion, we have also tackled about the importance of starting small, growing, and always solidifying at every step that one makes. And this ensures steady progress. So then, at what point does the growth milestone of a business allow the founders to continue strengthening? How do they measure this strength and evaluate whether they are on the right track or not?
This will vary from business to business. Okay, so there is no one size fits all rule, but from experience, one would start to introduce even more the governance concept in situations where you are growing in numbers. So you're growing organically. You are diversifying into a number of businesses, and therefore you cannot control everything on your own. Or you might achieve a relevant and significant initial milestone in terms of turnover. So you started small, 50,000 euros in turnover per annum, then you grow up to 250,000 euros in terms of turnover. So this would suggest that, listen, I have to have at least the very basic fundamentals of governance in place. There would be others, of course, and as I said before, this will depend on the type of business and, of course, the type of environment you are in.
So, this growth within the business and the possibilities and the risks that there might be issues between the parties that, as we said, they start positive, but things can turn sour and maybe they need to part company. How essential is it for and beneficial is it for the founders to, at the very outset, also think about exit strategies?
Very interesting question. Now, you started a business and you are already thinking about exiting the business. It might sound like a conflict, but in reality, it's not. Why? Because an exit strategy is crucial to understand how you are positioned within that business and when it is crucial for you to exit. So, for example, you say, listen, my exit strategy is that when I reach retirement age, I go out under these conditions. Or you decide that you want to exit when you think that the business has reached its full potential. Or you want to open other doors and you don't want to remain confined within a particular business. So ultimately, the strategy has to be roped around you, but most importantly, even around the business itself. Because many times, if the next strategy is not appropriately implemented, it might mean that it will hurt the business. So, from a founder's point of view, the exit strategy would be that you go out of the business at the right time, possibly when even you are maximizing the value for yourself as a founder of the business. So exit strategies are important, but just as much as they are important to have in place, be careful that they might also be disruptive. So a word of caution, be very careful when you are planning your exit strategy, because at the end of the day, one enters into a business because there's passion. It might backfire. So be careful.
And being careful is not only about the issues relating to growing the business carefully or exiting the business carefully, but it is also on the ongoing level of the business lifespan from a compliance perspective. What are the key legal and regulatory risks that should be identified during the early risk management phase for the business to eventually thrive?
Okay, compliance. Compliance is one of the, according to me, important factors to take into account when you are in business. Unfortunately, speaking again from experience, it is not the very first time that I come across situations where compliance is given the backside or put on the side. Okay, um, uh, compliance is important because understanding the cost of non-compliance, one would realize that yes, it might be even cumbersome, but it is an investment to be compliant in whatever you do. So, for example, it's not the first time that issues like GDPR, okay, the privacy laws are basically forgotten, or your obligations in terms of VAT and tax filings. They are at times conveniently forgotten. And there are other compliance matters which have to be addressed constantly. As I said before, the cost of non-compliance can be very great. And if you are not aware of these costs, basically you will be putting the problem under the carpet. And what happens there? At the very initial stages, you don't even realize that you have a problem. But when you are accumulating dust under the carpet on a constant basis, the carpet will start to rise. And there it will become an eyesore. Now I mentioned this in business. So I mentioned the cost.
While you were explaining your views, you reminded me of an old saying that I had come across a few years back, which said that compliance is expensive, but definitely cheaper than non-compliance. So we're definitely in agreement there. And unfortunately, compliance brings with it a lot of burdens. One of the burdens that compliance brings with it is documentation. So when looking at being compliant and the cost, sometimes not necessarily financial, but it can come also as a time cost, which legal documents would be essential to make sure that the business is compliant at its initial stages?
No, so basically one of the important documents which I did make reference to earlier are the agreements, okay? The agreements between the founders, the agreements between the shareholders in case of companies. Those are important to have, and they are important to be followed, because if you do not comply with what you have agreed beforehand, you will automatically realize the impact of it moving forward. In terms of compliance, you must have all your legal documents in terms of filing with the authorities. And why is this important? Because imagine a scenario where you want to sell your business, or imagine a scenario where you want investors to come over to your business. These guys who are going to invest, these guys who are going to enter with you in the business, if they're going to invest in your business, must be convinced that you are moving in the right direction in terms of compliance matters. Many a time, because of the cost of non-compliance, these investors, these future business partners might be scared to be in contact with you, and they would be scared not because they would be scared of the investment, but they would be scared of the repercussions this might have to their possible other businesses, and therefore they would say, listen, I prefer not to associate myself with your business because you are not compliant. So always look at the bigger picture, always look at the wider picture, treat it as being an investment in compliance rather than as to maintaining the cost of compliance.
So on that note of how important it is to be compliant, in your experience, what compliance obligations are most commonly missed, and as a result, they are jeopardizing the business?
Let me state the obvious. Me coming from a tax background, so non-compliance on VAT matters, non-compliance on tax matters, and by compliance I mean the filings, okay? The non-filing and the non-payment of social security contributions. If you have employees, the non-filings of the monthly FS5s or the yearly FS7s. So yes, from a tax perspective, and I will limit only myself to this aspect because this can carry on for ages. Yes, from a tax perspective, there is a big non-compliance issue. And when you come to look at it, I don't think it is ethical to not be compliant. Why? Because at the end of the day, this will come, as I said before, at a cost. So you'll be paying interest if you don't pay your dues. You will be incurring fines if you don't pay your dues. You might even be subject to an investigation to see why you are not declaring what you should be declaring. You might be subject to an estimated tax. And therefore, if this estimated tax, due or not due, becomes effective even through a judicial letter, then if you do not owe that money in reality, you still have to pay the assessment being raised. So yes, do keep all this in mind, because you will understand that if you are compliant, yes, you are giving yourself peace of mind going forward. You will address the business with the right resources, not using your resources to address a potential problem arising from, in this case, non-compliance on tax matters.
So, in a nutshell, prevention is better than cure. And as a result, the efforts that need to be placed into planning well for your compliance obligations becomes a very key element in the project management of your own business. So, how do startups proactively manage these risks?
Identify reporting deadlines, identify regulatory impositions on the business so that you know exactly what you have to do. Identify key players such as accountants, lawyers, because these people are there to help you in a professional way, and they help you to navigate potential problems even before they arise. So yes, being proactive in this manner will definitely help you reduce the risk of not being compliant. Then again, the ball is always in your feet. So ultimately, you are the one who is responsible for the outcome of complying or not complying.
Very often, intellectual property is seen as also as a cost rather than as an opportunity. And from a compliance perspective or from a risk management, risk mitigation perspective, how do you see intellectual property as a must-have?
Yes. Why is it important to protect your intellectual property? First of all, because it is something which you created. And because you created it and you are investing your time, you are creating a brand, you are creating a logo, whatever it is, okay, it has to be protected, because as you move along, one would be increasing the value of your IP. Secondly, through the increase of the value of your IP, once it is protected, you are safeguarding yourself in terms of copyright, in terms of other people trying to steal and basically get on your bandwagon and use what you have invested in, use your hard-earned reputation, okay, and they copy what you do. So yes, essentially, and when circumstances permit, you have to protect your IP as early as day one. But again, it might mean a cost. Now, why am I using the word cost as an investment? Because it might mean that you are protecting your IP at an early stage when it might not make sense to protect the IP. So if you have a very sellable idea, and of course it could be protected, then yes. But if you are still in the very early stages where you are doing your research, you are doing your development, and technically you are not in a position to enjoy the benefits of your IP, it might mean that you would have thrown money unnecessarily, because you would have protected something which has no value. So be careful when to protect your IP. Again, the principle is protect your IP at the very first opportunity, but then calculate exactly when that first opportunity is actually materializing.
So in a nutshell, what we're saying is that the timing of the protection of the IP is also a project managed experience within the business itself, which also brings me to another element as to timing. Some businesses register for VAT immediately after the business has been incorporated. Others might wait for a longer period before they register for VAT. How crucial is it to register immediately or to wait? How to decide?
VAT is another matter, or the VAT registration is another matter which is unfortunately overlooked. Okay, there are certain conditions which need to be satisfied. What are these conditions? That you must be actually carrying out an economic activity, that is, you're in trade, that you are being paid for your business activity, that you are entering into business in Malta. Okay? When it comes to VAT registration, and if these conditions are met, for example, you have to register for VAT purposes immediately. Why? Because the obligations arise as from day one. Now, when it comes to VAT registration, one has to be very wary that there are different types of VAT registrations. So you have VAT registration under what we call Article 10 of the VAT Act, Article 11, 11A of the VAT Act, and Article 12. So knowing when to register and why you need to register under which article is very crucial. But perhaps this topic on its own can be subject to a further podcast.
No doubt whatsoever about that. But when we talk about VAT, obviously there is finance involved because you charge VAT because you are actually invoicing your customers. And obviously there are the costs that are involved also in running the business. We have come to the end of the first part of this podcast with Dunstan Magro from WDM International. We will be welcoming you soon for our second part and look forward to seeing you soon. Bye for now.